now going to begin panel number 3, Raising Capital. I'd like to introduce our moderator, Eren Cicekdagi, and he will begin.
Some of you feel my pain that every time somebody has to announce you, they have to come to you and ask for your pronunciation of your last name every time. So, should we wait a little bit more or should I start? All right. So this is the fun panel. This is the fundraising in this kind of new world, new era of EB-5. So we have an amazing panel here. So my name is again Eren Cicekdagi. I'm the managing director at Golden Gate Global. And fun fact for me, I'm Turkish, and I actually just flew in from Istanbul from an event over there, and I'll ask a couple of questions about that. So if you could just like introduce yourself really quick, that'd be great.
Morning, everyone. My name is Cynthia Gomez. I'm an immigration attorney at Saul, Ewing, and Laird. Great to meet so many of you that I've only emailed with. Fun fact about me, I have a 4-month-old daughter named Alessia.
Hello, my name is Andrea Devis. I am part of the EB-5 capital team. I manage all of their LATAM fundraising, and it's great to be here today.
I am Calabrese. I am CEO of CanAm Investor Services. We are the affiliate broker-dealer of CanAm Enterprises. We're based in New York, and it's great to see you guys all.
Hello, my name is Allan Chow. I represent a LA-based developer named Industrial Realty Group, short for IRG. Most people never fuss, but I probably heard of the regional center that we've been working with since 2008, CMB Regional Centers. So, and then we parted way with CMB 2014, and we continue to use EB-5 money in some of our projects.
Hi, I'm Brennan Sim. I run global sales for EB-5 United. We've been raising capital in the EB-5 program since 2011, and happy to be here. I'm based here in Miami, Florida.
Hi, I'm Winnie. I'm the CEO and Chief Counsel of Manhattan Regional Center. We also have been raising capital since 2011. I joined the Regional Center in 2016. I am an immigration attorney, represented investors in the past. Many people ask if I'm based in New York because of the Regional Center. While our projects are in Manhattan and all over New York City, I'm actually based in California, because that's where I was at when I was recruited in here. So we have. Yeah, so happy to be here.
Fantastic. So I want to start with a really kind of a short icebreaker for everyone. And in 1 or 2 sentences, just if you can name one biggest challenge and one biggest opportunity you see with the RIA from a fundraising standpoint. Why don't you go ahead?
Sure. So I think the biggest challenge for me right now is the uncertainty with USCIS. We have the RIA, we have forms, right? And so the fact that we don't have a policy manual or a lot of gaps built in, I think is complicated. And also with respect to processing times, right? What do you tell a prospective investor with respect to processing time? I think pretty much all of us are just giving us best guess. And so that's something that I would say is a challenge. And then new opportunity, I think that the concurrent filing of the adjustment of status is really attractive. I think it's a game changer for a lot of investors looking to move to the US sooner.
I think for us, I think it's been one of the biggest challenges at the beginning was the agent disclosure and calming all the agents down that the market could still exist if they would, reveal and sign that, and the investors would not go away. And I think that is something that was sort of within September and August, very challenging and calming their nerves. But I think the biggest opportunity with RIA is not only the transparency, but also the concurrent filing, especially with processing times being so uncertain for different markets, the premium processing not being certain. So I think that ability to provide some certainty has been an opportunity that we've seen in the market.
Just to dovetail on both of your comments, the uncertainty that's out there is going to make it difficult. I mean, you talk about processing times, how long are things going to be out there? But also the lack of definition of how long funds need to be at risk, right? I mean, that's a lingering question that's out there that could have real dramatic effects on how people want to structure projects, right? So I mean, that makes it also both the biggest challenge, I guess, and uncertainty, but it also makes it the biggest opportunity because as you know, what's been talked about in many of the other panels is the additional creativity that is now possible in deal creating. You know, do things get shorter? You know, do what happens in a raising rate environment? You know, all of these things coming in allow for some real opportunities in the market, but further clarity on things like processing time is going to be what makes this possible.
From a developer point of view, the biggest challenge is to really catch up on the new laws, to understand the nuances, because we get questions answered by all the investors running at different angles. That's the biggest challenge. Opportunity-wise, because I think the party in China is pretty much over, because the door is going to slam shut in terms of both people and money movement. Literally, I just got a text 5 minutes ago saying that the government might be cranking down on the immigration industry. So I think our opportunities maybe in other emerging markets. As a developer, we want to find people that can help us continue to raise money in other parts of outside China.
I have to agree that I think that that clarity has been the biggest hurdle that we've had to go over. It took from March until August for us to be able to start accepting investors into the program. We haven't had a lot of clarity from USCIS on how everything's going to work. It's taken time for lawsuits to materialize and for us to be able to really get to the market. And then once we hit the market, we're kind of in a state in the world where it's been a little bit difficult to raise capital and bring investors in with such a strong dollar that don't want to lose 20–30% that they've lost over the last 6 months just in the currency exchange rate. So I think there's been a lot of hurdles up front. I think down the road, as we get more clarity, that's going to open up a lot more opportunity. As we see the first I-956F adjudicated and we see the first I-526Es come in and we see what priority processing is versus non-priority processing, I think that's going to open up a lot of clarity, and that clarity will help both investment issuers as well as investors make decisions.
I would have to agree. The biggest challenge, I agree, the uncertainties of the law, and then educating agents and potential investors about the new law. But another thing I guess Allan touched on is and also Brennan, the strong dollar and getting money out, that might be an issue. And I think it's with the recession and the strong dollar, I think we really just need some stronger, just with strong projects. I think that would be able to help investors feel secure and try to get money out at this climate with the current exchange rate. But that is money will be coming in slower than I think everyone wants to. So I think that would be the biggest challenge. But then it also comes with new opportunities. The concurrent filing, I actually see that it has opened up a lot of opportunities in China. I think it's starting to open up. And surprisingly, I'm seeing that agents are finding a way to get money out legally. And there are actually a lot of investors with money out already. So I actually have been seeing new opportunities in China with our agents reaching out to us again with potential investors. And of course, the other markets, there's a lot of demand. I think the concurrent filing for China and then other countries that are that have a big base for EB-5, they are very interested at this time.
So I have a handful of topics and you can just like jump in whenever you want to address. We don't have to go in line, but just segueing into what you just said about China and the market, and also the previous panel about rural TEA, non-TEA. do you have different approaches into different markets based on what kind of projects you're planning to do? Like, are you negating some of these markets maybe for specific for a product versus another, or are you prioritizing? How are you approaching the kind of or merging that? Okay, I have this type of a project in terms of a geographical kind of standing versus the market that's going to fit the best. Is there kind of a set like a connection there?
Do you want me to start?
Anyway.
Oh. Sure, I guess I can start. I think for China, people do come to us and ask first, do you have a rural project? And for us, we have been focusing on New York City projects, and so we don't have a rural project, but we explain, I guess, it's the education about how the set-asides work. And as the first panel said, it's a lot of is up to conjecture, like how long would the backlog actually be if you don't invest in a rural project, or like that's all, like right now, everything is current. So, but I think there's some misinformation out there that we have to educate, because they are hearing in China that rural projects, they get in faster and they won't face a backlog, as like potentially not a backlog, or it might be just very short backlog. And I mean, no one really knows. So we have to educate them on that respect. And then, but I think China, they are really trying to look for rural projects, but we are able to still market our high employment projects to them. And then, but they also see the return of investment as important to them as well. But other markets, I think they're more focused on high employment projects.
I mean, I think what's been interesting about the new legislation is how really binary the new project creation has become, right? Because there was always in the program, there was always projects that were better received in better markets. Right? I mean, you can deal with South America, you can deal with India. Yeah, there are different preferences from cultural reasons. Now that you've got carve-outs, and now that you've got this, you really are looking at this very specific thing. So this is here. This is literally just going to this market, and I think a lot of people are now kind of anticipating, okay, so or hoping that you can now take this project because it has this carve-out. You can just drop it in. It's going to be like dropping water in the sharks, or to just go feeding on it in certain markets. And ultimately, I think that the strength of the project is going to really play out. As much as you have to be aware that these carve-outs are going to be very important for different people. There are still ways for markets to still interact with them if it's a quality project, right? So I mean, you're cognizant of this, but ultimately, you need to put a good project out there, because it's all going to be very short-lived if you start putting out projects that just aren't meeting people's
As a developer, we've been using EB-5 since 2008. Altogether, 10 projects using EB-5 money. Does represent less than 5% of a total project that we've been involved in our company's 50-year history. All of the 10 projects were urban TEA projects. And just like most of the pre-RIA EB-5 project. Going forward, we're going to be exclusively focusing on rural area projects. I think those going to sell. So any investor come to me, I will discourage them from urban TEA. Because 1,000 set aside, you're talking about 300 petitions. It's probably already gone. Next year's quote is already gone. So we will be still raising EB-5 money, but exclusively focusing on rural TEA.
I agree with that. I think as we've gone out into the market, we've still seen the three main markets in the industry come to life the most, that being India, China, and Vietnam. Vietnam has a few issues going on right now that's slowing down that market a little bit more. But as you see, India and China both not current on visa bulletin, not in the set-asides, but in the old EB-5 program. That's left a lot of scars in people's minds and investors' minds all throughout India and China. And as we've come to market here under the new program, you really see the desire for priority processing, for visa set-asides. And when you look at the industry and you see how few of, obviously there's going to be a lot of rural projects entering the market here over the next 6 to 12 months. And that will probably continue for a couple of years. But you don't see nearly enough projects in the market to take up the set aside visas that there are for rural. And so investors want certainty. And at this point, we still have a lot of uncertainty in the program. This is a level of certainty that is helping those investors make decisions. And I think that's really driving the market right now. And I think we're going to see that continue into the future.
Any comments, Andrea?
I think for us, it's been a lot about sort of the TA, the not TA in terms of the demand for the market. We are sort of exploring that, but it's for us, it's always been sort of the priority of what are the project fundamentals. And I think that with the uncertainty in the market, with investors becoming more sophisticated and analyzing the projects, that is something that, you know, we are taking more seriously. And I think maybe the industry is doing as well in terms of the capital markets changing, the cost of capital, the structure changing as well, because it's going to be for the next 5 years. And investors are more hesitant, but at the same time, more sophisticated. So I think the project fundamental.
Any investors coming to you asking, well, find me a rural project or find me, I don't know, something specific, or are they coming to you just like with an open mind and asking that question for a project?
I think that more investors are coming to us with an open mind. I think I call this like kind of like Winnie was saying, and this is an education period where they really want to make sure that the project is structured properly, that they're, you know, making a sound investment. Rural matters, but we don't really have an example point to an approved I-526E yet. So until that happens, I feel that the structure of the project is more attractive, at least for the markets that I'm meeting with a lot in LATAM specifically.
So let's switch gears into, again, RIA and the promoters, the elephant in the room, right? In terms of like how RIA treats promoters now and the requirements around that. And like, how many of you in the room probably heard before, like a finder saying like, well, don't tell them I'm getting paid. It's just like, this is between us, right? So I think those guys are going away. I mean, they have to, or they have to adapt. So what are you seeing? What are some challenges in terms of this new market and treating and conversing with the promoters? And also, what are some kind of creative ways you're seeing? Because I know, like, well, maybe there are ways to get around this, right? Maybe I establish an entity and that entity becomes my promoter and there's the kind of sub-agents, etc., so they don't have to disclose. I don't know. I'm hearing a bunch of different approaches, which I think most of them are not kosher, but what are your thoughts on it?
I think that it's a drastic change. I mean, for everyone. I mean, so speaking from our perspective, so CanAm Investor Services, we're a registered broker dealer. So acknowledgement of fees is something that we have been doing with our non-affiliated finders for years. I mean, and that's in compliance with FINRA rules. So a lot of the RIA compliance that came in kind of works in tandem with that. So it wasn't a whole on, you know, huge change that came on to the people, at least the people that we work with more often. But it is still, now that it is mandated, and it makes for a little bit more of a level playing field for everyone knowing what's coming in. I think that's a great thing, right? Because, you know, we talked about at the beginning, you know, what are some of the greatest challenges and some of the greatest opportunities. And, you know, a lot of that also comes from the rate environment that way, right? So like this brings all of this creativity that can come to project construction and allows for really interesting things to come to market. But the fear that you have in mind, you know, at least in the old way, is great. That means that someone's now going to just start paying 7%, or someone's going to now think that is the new easy button again and just start paying it to fine. Well, you can't, well, you can, but you have to tell the client that, your finder's getting paid $50,000 a year. And that's going to be impactful in their decision making. So, those sorts of things, like they are definitely having a change, and it is impacting the way people are able to move forward with it. But I think that these are very positive changes. And now in terms of like how people are disclosing this, I mean, you hear the whole spectrum. You hear there's the one end that says, well, all those fees are listed in the offering, so they know about it, so it's fine, so it's already been disclosed, right? And then there's the other end of the spectrum that might say, I need to show them like a printed out version of the check that got sent to the bank. Like obviously, where you want to make sure you're doing is that you are, complying and you are doing it as faithfully to the RIA response, right? We have a separate document that we put in there that we said that people will sign off on separately, talking about the fees. It's kind of in line with what we were doing previously in terms of disclosure that the client would be signing from the vendor perspective, but trying to also cater to the RIA.
And I think on top of that, the type of investor has also changed, right? That 300,000 differentiation in Latin America, especially, has created a new type of investor, more sophisticated investor, an investor that usually has a family office, that has a investments team that analyzes that. So I think the type of client and analyzing this new offering has changed, which we do, a very similar approach of the agent disclosure, but that has caused the promoter to change. It is no longer the same promoter that just would suggest this is the project, we'll put you in touch. Now you have to have a more sophisticated promoter that knows the industry, that knows economics, that knows the currency value and can speak to that in order to, have the client sit in front of you. And so I think the type of promoters will also change as this new disclosure obligation comes into line and becomes more clear, and with the type of investor as well.
Brennan, do you think now as a regional or issuer, you have a better bargaining power now with even that they have to disclose these payments, etc.? So I think the issuers are in a better position now. Is it the issuers market now, or is it like pre-RIA, like Wild West? Or
I think it goes a little bit both ways. It definitely does help hold different networks and agencies accountable. You're getting rid of a lot of the riffraff in the industry. But I think that goes both ways. I think from an issuer standpoint, there's a lot more disclosure as well. And it's a lot more arduous to really run and structure an EB-5 project, as well as make sure that you are presenting everything that's needed to the USCIS on an annual basis. And I think that's going to keep the people who should be raising EB-5 capital in the market and get rid of a lot of the people that should not be. And so I think it goes a little bit both ways. And I think it's good because there's a lot of people, finders in the industry from places that are not quite as well structured, that don't really understand the market that well, that don't really understand EB-5 that well, that are just saying whatever they want to clients just to get them in the door. And I think it's going to get rid of a lot of those people, because a lot of those people are just telling their friends, hey, I'm going to get you in all this stuff. And they're not telling them they're getting paid for any of that, like you mentioned before. So I think it's good. I think it's good for the industry in whole on both sides of the aisle.
Winnie, has your kind of structure or agreements changed from before, like with the RIA? Is it more complex now?
With the agent agreement?
Yes.
Well, I wanted to say at first that like we have a similar disclosure page where you list all the compensation and then investors have to sign. The first reaction I got from agents were, this is too clear. You're making it really clear. And then they came back with like other structures that other regional centers are doing, like they just mark it into like this paragraph that you can't really see. Like, can you do that? And that, well, like, no, our offering is out. Like, I was like, that's the point of the law. It's supposed to be clear. Like, they said is too clear. So I think it's I've seen a difference in like weeding out. We can see some agents that are really just trying to get as much money as possible. They have figured out a way with, I guess, other regional centers that are willing to do something like offshore companies or other things that I've heard too. They go off on that. And then, but the ones that stay with us are those who have a more reasonable agent fee structure, and they're actually willing to disclose. So I think the market, I really hope it continues to go that way, because the ones that are staying with us are the ones that I can see are more ethical, and they're really focused on the project itself, whether or not it's strong. Those that are asking us to change how, make it more unclear, they don't ask that many questions about the project itself. So I see the difference, and eventually, hopefully, investors can see which agents are actually finding good projects versus the ones that are not.
Allan, you've been working in
Yeah, I
China.
mean, for transparency, I mean, I think the more transparent, always better, because that helps the industry survive in the long run. For us, because we are very unique in terms of marketing, we do work with regional centers, but we go direct marketing to investors. So I actually, prior RIA, I use that as a marketing tool in terms of transparency. I'll describe in detail what the agents in China, what the regional center, what the JCE, now each get. So that helps me tremendously in terms of marketing. And sometimes I see the investor like, wow, I'm in the wrong business. So I think it helps us going forward as well. We always want more transparent. But I think Rohit mentioned in the first panel, as an issuer, we got to be a lot more careful in terms of disclosures and stuff, the stuff that we haven't thought about prior offerings.
So speaking about disclosure, Cynthia, do you see investors coming back and seeing the disclosure form in a investment package or subscription agreement? Have you seen them react to it? Like, did you get any feedback from investors on that?
I haven't yet, but I think I agree with the fact that the level of sophistication of the investor that we're seeing now is very different. And I think that, you know, it's a lot more clear once it comes to me as the immigration attorney doing the consultation, and I can really tell, right? They're already well informed, they understand everything already. It's not like questions about, oh, so this administrative fee, like they're very clear with what all the fees are. So that's positive, I think.
So let's move. So promoters, either promoters or direct marketing, everybody's exploring new markets or existing markets. So let's talk about a little bit on the emerging markets and your firm's strategies in that. Like, when you look into the post-RIA world and new markets, do you like to be the one that's trailblazing into countries that are less explored? I don't know, you go to Philippines or you go to Indonesia, Kazakhstan, whatever, and you try to trailblaze and train the market and educate and then be the first comer in that market? Or do you like to be, or prefer, I don't know, and maybe there's no clear answer to that, but do you prefer to be kind of, okay, this is a tested market, let's go and not be Coca-Cola, but Pepsi, and then just like clean the market that way? What's your approaches on that? Any takers? Brennan?
I'll take it on. I think that you kind of have to work in both directions. Over the past 5 years, I'd say since the beginning of 2018, when the Chinese backlog exceeded 11 years, that really put a shift in the market. It really slowed down capital raising in EB-5. It really changed the entire industry. And throughout the next couple of years, there was still quite a bit of EB-5 investment between then and November of 2019, when it was going to change to $900,000. So I think at that point, most people had to shift to finding new markets to capitalize on, whether that was moving to India, whether that was CIS countries, whether that was Europe, whether it was somewhere in Africa. I think a lot of groups have been working over the past 5 years to find new markets. And now that the Reform Act has come in and really reopened some of the key markets, I think we're going to have a little bit of a hybrid approach for the next couple of years, where you're going to need, everyone knows that they need to capitalize on the big markets because those are where we've built relationships over the past 15 years in this industry, and where there's a lot of power to be able to really fund a lot of deals through this program in the United States, and that's the goal of the program. At the same time, you do see a future where all the set-asides will backlog and those markets will fade away again. And so if you're not maintaining your growth throughout the world into other markets, at that point, you will lose the big markets and not have the ability to maintain the type of capital raising that you're used to. And so I think it's imperative really to work in both directions and continuing to grow markets, but as well, I think that everybody's going to capitalize where they can on existing relationships.
Yeah, no, I mean, I think Brennan said it really well. You can't, just get off a plane and wherever and just show up at the airport and throw business cards at you. I mean, you look at things, there's, you talk to your channel partners, you talk to, the attorneys that you work with. You can do some strategic outreach, through some like social media, through some like internet marketing, stuff that is, you're putting, effort and putting resources into it, but you're not throwing the kitchen sink. And you start to see where the reaction is, you start to see what sort of, outreach are coming and how scalable it is for you. And then, you can make put some more, intensive efforts into, consider having a person, situated, more closely into that, to be visiting it personally, more and more often to actually start bringing, real results out of it. Because I mean, Brennan said, great. I mean, you look if you were sitting there in 2016, the only market that you were working in China, then you had a very, very bad, the ability to cultivate new markets and be able to continue to bring in people from other areas. And any financial advisor would tell you diversification is the best thing that you can do for your portfolio. It's the same thing.
Yeah, and I want to add to that, based on experience dealing with investors from China, typically they're not very sophisticated. I can count with probably 2 hands in terms of investors who has read through the offering documents. So they place a lot of trust on the agent or name recognition. Beverly Hills, Waldorf Astoria, Fifth Avenue, they do name recognition. Going forward, I think in other emerging markets, investors are a lot more sophisticated. Markets like India, like South America, they will dig through your offering documents and ask a lot of detailed questions in terms of capital structure, exit strategies. So you got to be ready for those type of questions as well. In terms of marketing, I think the China market, I just personally don't think it's going to go back to RIA 2016, the big parties, but there's still a small opportunity that we can raise some money. But going forward, as a developer, we want to work with people who's going to be on our next panel, and companies like LCR, who's well positioned in other emerging markets outside of China to continue to raise EB-5 money.
Yeah, for us, it's also been a diversification in terms of the team and the markets. I agree. I think the big markets have come back with this a strength that the emerging markets are not showing. I think they're slower in that conversion rate. And I think that aspect of marketing in emerging markets is very different than the mature markets. The Asian markets have these big agencies that, sometimes as regional centers, you don't even need to meet the client. But these emerging markets that are I don't think they'll have the scalability and the volume that the mature markets will have. Therefore, it's important to have this diversification in the pipeline. But the smaller markets will have this personal relationship that takes trust, takes time. You need to be there. It takes a lot of face time. The promoter has a very different role in emerging markets than they have in the mature India or China markets, where they have, here they're sitting at the side of the table accompanying it. But in China, they're actually selling the project for you. Here, they're just accompanying. And what they're giving off to you is that trust. Because a lot of them, as you were mentioning, they don't read the study, the offering documents as well as other markets do. So what you're sort of picking back off is that trust that they will then place upon you and then allow to move forward with your project. So that marketing is more silent, is more private. It's not, you know, a lot of these emerging countries have security issues, have ability, people do not want to display this type of wealth. So it's a very silent approach rather than sort of this big bang that I've seen from the Asian markets.
So as an industry, we have been followers in the past, right? We have been like basically, especially issuers. So whatever agents are telling was true about a market, or we would just basically follow other trends or other investment kind of products to be able to see where the market could be, an emerging market could be. So do you think data, technology, and more kind of new services could benefit the program in general for us to kind of make more sophisticated choices in terms of going into new markets? For example, a lot of private equity real estate firms or any private equity firms are just like looking into wealth data. They're looking into other kind of parameters. Do you think now it's in the like marketing budget, or it should be in marketing budget for all of us now, instead of just paying gazillions of dollars to a finder that promises of 5 investors?
Yes, I would say that the need for data in the industry is very important, not only as a regional center, but as, you know, when it comes to processing times, you know, documents, where are there, are the Reg N or Reg D? I think there is an imminent need for the industry to share more our data, because right now we're relying on government data that is very outdated. So how can you make, you know, marketing or strategic decisions on data that is 2 to 3 years old? So I think there is a need for us as an industry to create that ability, that sort of groundwork for data where we can share and make those decisions together. And that will, I think, will also improve sort of the sale when you say, you know, these are the type of processing times that we're actually seeing, but not what the government is reporting. So yes.
Next question. Go ahead. Yes, sure, please.
So I'm very interested in the panel's perspective on how investors react to the RIA. Right? The law puts a lot of burden on issuers, but it's really for the benefit of investors. In private equity markets, where you were just going, investors are sophisticated enough to ask questions about how the issuer is meeting those compliance obligations. In the RIA, it's a pretty wide range. You hire a fund manager, but a fund administrator, but it doesn't reference what experience or quality. You can do an audit, which is a completely different thing. So the question is, and I look at CanAm and Pete's company, right? So they have a broker-dealer, they're hiring an external fund administrator. I mean, that's very different than somebody who's just doing an inexpensive audit. So do investors care? Do they ask those questions? Just interested in your perspective.
I mean, I'd say yes. I mean, you've heard from everyone in this panel, the word sophisticated gets mentioned a lot, and it's absolutely accurate. You know, I mean, I'd say the way that people react and they can see the integrity that comes into it is definitely appreciated. I mean, the sophisticated, I mean, we have people that will point out on page 74 of the offering, you had a typo on this, and you should have been, I had to say this, and say, you know what, you're right. You know, like, you know, not a material thing, but so the people are going through it and they're checking on it. And, you know, the RIA, what ends up happening now, which is great, is that they're asking the questions, and so the education gets to happen, right? Because people end up hearing a lot of things. Well, did your 956F get, you know, filed? You know, do you have a receipt notice? And especially, you know, before the settlement happened, that was the main question that people were asking. But it's not just that. I mean, people will be asking, okay, so where's the flow of the funds? Where are the funds going to be going? You know, like, tell me about the structure, about how this project is going to be going. And these are all great things that people are asking. You know, and obviously, you know, like, well, what is this for? What is that important as the other? I mean, we talk a lot about the fee disclosure. It's a big deal to people. And I think that knowing and feeling a little more comfortable is a big deal. I mean, that's the first thing that, you know, we say whenever people start asking questions, I mean, say the RIA is great for you, full stop. You know, there's so many things that go into it that make this a better experience for the client. And that is a great thing for all. I mean, it's a high water, event.
In terms of marketing, personally, I think I have probably one of the worst job in the market. Because our projects are not in Manhattan, not in San Francisco, Chicago. Our projects in the middle of nowhere because of the nature of our business that we're involved in. We are an industrial property developer. We typically pick up in obsolete, brownfield, middle of nowhere, General Motor plant, Ford plant, IBM, NASA property. So our approach to marketing is very unique compared to most of the regional centers and direct developers. Because if I try to sell the project, I'll never win. Our approach is selling project without even mentioning the project. And how is that? Because you got to really fight for your, what you have that others don't. And what we have is we've been using EB-5 capital since 2008. And to date, we've used EB-5 money on 10 of our projects. We've returned EB-5 money almost $250 million, 500 families. So then that makes my job the easiest job in the world. Depends on where I focus. If I talk about project, if the investor asks, where's Akron, Ohio? I know I'm in for a long night. So I don't want to, it's not like we don't have answers for any of their questions.
Like Ron James, right there.
I try to convince them that doing the due diligence is in vain. Because doing the due diligence will not get you off all the projects that failed in the past. The investors probably has asked all the questions that you're about to ask, and they still chose that project. Why? Have you even thought about it? If you keep using that, you're probably going to run into a project that's going to fail in the future. So how do you raise your probability of success? I mean, you got to look at EB-5. Essentially, it's just borrowing money. In Chinese saying, the low Chinese saying, you lend money to people that paid you before. So I try to stress on that, and that's been successful so far.
So I have 5 more questions, but we don't have time for it. I told you this was the topic. But I want to go through all the panelists and ask you in 1 or 2 words, what do you think the 2023's kind of the winner concept's going to be for EB-5? The concept, whether it's China or whether it's data, or is it I don't know, sophistication, or anything that you think is just 1 or 2 words that's going to define the EB-5 in 2023. What do you think, Winnie?
I think security and transparency. I think, this is what investors are looking for. You really need secure, strong, safe projects, and you have to be transparent and open to them. That will win their trust.
I was going to say transparency. So yes, I agree with Winnie there. I think that with where we have come as an industry, we've had to provide a lot more transparency over the past few years, as I mentioned, as the Chinese market kind of died down 5 years ago. And we started working a lot more directly with clients. India is a place where people speak English. We're working in other markets where people speak English and can communicate directly with us as fund issuers. And so I think that's really changed. And also with technology and the changes there have been, and now really being able to transact over Zoom in a way that you just couldn't do before. I think transparency is what investors crave. It's what they want. It's what they want to see. They want to know what's going on at the site. They're not necessarily just sitting there asking you exactly how you're complying with every single law in the new reform bill, but they want to see that you are complying with the law and meeting all the standards that are necessary. And they want to see what's going on. They want to see what's happening at the site. They want to see who the developers are, or they want to see everything. And I think that is a much easier task than it was in the past with technology. And I think that's going to be the main theme moving forward.
For us, if you want to just use 1 or 2 words describing EB-5, I think it's scalable rural area. We plan to raise probably 1 or 2 rural projects every year. I like the word scalable, not a single structure.
Great. Thank you.
I mean, for 2023, I'd say visa carve-outs. I mean, they're there, they're available, they're all current. Everyone wants to know, are you in a rural project? Okay, what are you releasing high unemployment TDA? Great, my son or daughter is going to college, University of Miami, and concurrently apply, and we'll move ahead with it. I mean, that's what this current, like, the rate out rollout of it is going to be. I mean, long term, everyone needs to, you know, all the compliance that comes in is going to settle in, the market will normalize, but I think right now, that's, at least for this year, that's great.
I would say education and structure. I think education is getting out in terms of the new markets, the promoters, the strategies, educating the market of what the new scenario in EB-5 2.0 looks like, and having those creating those structures, and in terms of also project positioning, right? What happens if there is that rainy day that people are expecting in terms of the US economy? How are we positioning ourselves for that? So I would say education in terms of expansion and diversification and structure, instead of in terms of preparing ourselves for what may come in macroeconomic levels.
Yeah.
From my perspective, facing investors, I think education is important, but also clarity, explaining the fact that there isn't a lot of clarity right now, but at least being clear about what we know and what could be coming, and then building that trust with the investors as well. And I think the face-to-face contact, the fact that, you know, we're meeting with people in person a lot more, I think that really makes a difference.
Thank you. That's it, folks. Appreciate it.